Good afternoon, everyone. My name is Gonçalo Moreira. I'm content advisor at FX Street, and I will be your host for the next 45 to 50 minutes, where we're talking about point and figure charting. By the way, this webinar is sponsored by the Vantage Point Intermarket Analysis software, based on two patent pending technologies. Vantage Point forecasts market trends and trend changes with up to 86% accuracy. If you trade futures, forex, stocks, or ETFs, Vantage Point will help you become a more profitable trader. Hi, Davinder. Good morning. Buenos dias. Glad to see you all here. This is the fourth webinar, the third recorded one on this point and figure series. It's thus the continuation of the previous ones that we have been doing. We started from scratch, from zero, constructing the point and figure charts. We saw in the previous webinars how to construct the one box reversal. Then we went over to the multiple box charting, and we covered basically the three box reversal type, but we also saw different types. And today we start with the point and figure signals. We start with detecting the buy and sell signals generated by very basic point and figure patterns. Okay. I hope you had a chance, at least those of you who are really interested in point and figure, to review some of the recorded webinars we have done before. If you could attend them live, much better. It's not going to be very complicated. We will go step by step, but the knowledge that we will introduce today is based on the basics that we have already covered in previous webinars. Point and figure charting is a completely different or very different chart construction methods than the ones which are more popular in the trading world, specifically in the forex arena, which is the Japanese candlestick and to some extent also the bar charting. Point and figure has a different construction, as therefore different readings and different types of analysis, and this is what we are going to cover. Our aim was to present this information to you because it's not a very widespread knowledge. Only few people, relatively few people know about point and figure charting, and it was in the past usually a charting method that only professionals used, because in order to have the best potential out of point and figure chart, you need tick data or at least minute to minute data, which to some extent is not easily to get, and you preferably need a 24-hour market. It's not a requirement, but in case you have a non-stop market like the spot FX, this is the ideal ground for point and figure. And these two conditions we meet them at spot FX trading. We have a 24-hour market, and tick data is relatively easy to get, and so we can extract the best from this charting method. And it was a pity to have this topic uncovered in our webinars at FX Street, so we thought to introduce them to you. We will thus cover today basic point and figure signals and patterns. We'll see some idealized examples and also some real case scenarios. we'll discuss the terminology, which is specific for this type of patterns and this type of charts, and we'll see the differences between the one box and the three box reversal charts as for the patterns. Okay, and finally, if we have a chance, you're welcome to ask questions, and we'll discuss a bit further. So let's basically start with the three box reversal patterns. The two basic patterns which we are able to detect in three box reversal charts are the double top and the double bottom. Okay. Note the hyphen when we write double top and double bottom. This is to distinguish them from the usual double top or double bottom in other chart methods, where we associate double top to a topping formation or a reversal type of formation. The double bottom is in other chart types is also a reversal type of formation. Once there is a drop in price, a stagnation or a consolidation phase with some accumulation at the bottom and a subsequent rise in the price, making this a double bottom. Pardon. In case of the point and figure charts, we will see that the double tops and double bottoms can be either continuation as well as reversal. So do not confound them. When we talk about double top and double bottom, we do not mean by that there is a topping formation, but rather a certain pattern, okay, and a very specific pattern which only exists in the way that we see here in this chart. Okay, here we see two types of continuation, a continuation double top in that case on the left side, and a continuation double bottom on the right side. Okay, and these are the most basic patterns in point and figure, on which all other more complex patterns build upon. Okay, so hope you are already familiar with the X and O's on point and figure. X meaning there is a rising, an ascending price, reverting in this case by three boxes. We are talking here about three box reversals. So any visible reversal in that chart is as a minimum of three boxes, and a subsequent or continuation of the previous ascending move, breaking that resistance in this case. Okay, this would be called the double top. And on the right side, we see the double bottom, where there is a descending column of O's, a subsequent rise or reversal by three boxes, which is the minimum reversal, which is chartered in a three box reversal, and immediately thereafter a new reversal by three boxes, plus another one breaking below the previous established support. Okay. The characteristics of double tops and double bottoms are very unambiguous in case of three box charts, so they are very easy to recognize. There are always two X or two O's in a row, separated by an empty box in between. So this means that you have a reversal in direction in between. Remember that anytime we have a change in direction, there is also a new column being drawn, and that means that the first box is left empty, and we start drawing on the box to the right and below in case of a down reversal, and a drop of three boxes, and a rise of when there is a rise of three boxes, also the box below that's a new column on the bottom of the new column is left empty. So this is a characteristic double tops and double bottoms, there are always two columns forming the resistance, forming the support, separated by an empty box. These patterns can be either continuation or reversal, as we already said. So here we have on the right side, these are two continuation, a continuation double top and a continuation double bottom. But the double top can be also a reversal in case there is a strong drop in price, subsequent rise and drop forming initial resistance level, and a rise up to that resistance and breakout. In that case, it's a double top. It's called a double top. In that case, also a reversal double top. But that doesn't mean that it has to happen on a topping formation, as we know from other chart types. Okay, it can happen in any area of the price chart. So also in a very bottom of your chart. Okay. Conversely, the reversal double bottom can happen at tops, but it's called a double bottom because it's a break of a support that is formed by this drop by in that case by 3 boxes here after an ascending move or an uptrend. There is a first drop and a subsequent rise forming an initial support, and again a test of that support and breakdown of that support in the next column, and establishing this double bottom pattern and the subsequent sell signal, which indicates that we are in a bearish trend. Okay. The good thing about the identification of double bottoms, double tops, and the reversal types is that there is only one version of this pattern in the 3-box reversal chart. They will always look like this. Okay. So as where in other chart formations, there is some ambiguity, or if we go into other reversal amounts, there will be some ambiguity as to the definition or the recognition of patterns. In the 3-box reversal, there is the chart patterns always this chart pattern specifically always look like this. Okay, so they are easy to recognize. The only difference between the continuation and the reversal means that the reversal needs at least 4 columns, whereas the continuation only 3. And this is understandable because in the case of a reversal, we need that first descending column to appear in order to have a first reaction to the upside and subsequent drop in order to form the first resistance, and then we need a second rise, the second rally, in order to break that resistance. So all in all, we need 4 columns for the reversal double tops and double bottoms, whereas in the continuation, double top and double bottom, we only need 3 columns. Okay. This to say also that the continuation pattern is obviously more reliable because it occurs in the direction of the trend, but depending also on the circumstance, a reversal can be also a strong signal if it is accompanied by another pattern or other analytical readings, as we will see in future webinars. Okay. For today, we stay with these very basic patterns because, as I said, all other more complex patterns are based on these ones. Okay. So here we see an example from a couple hours ago. This is an example on the euro dollar, and specifically this chart, as you see above here, this is a daily chart. Means it's taken the high low prices from the daily period. Okay, and each box is worth of 20 pips. Therefore, it's a 20 per 3 box reversal. Means that each time there is a change in direction, each time there is a new column being drawn, okay, always to the right, okay, we have advanced always to the right to the chart. This on that side here, if you can see my cursor, this is the last column being drawn, and this is the price at the moment of the snapshot. This was 3 or 4 hours ago. This is the last column. So the 20 per 3 means that the 3 is the reversal amount. Means that any new column being drawn requires at least a reversal of price in the order of 60, or minimum, with a minimum of 60 pips from the last plotted box. Okay, this is something that we have extensively seen in the previous webinars, where we studied deeply the construction of the chart, and here already we see a constructed chart of the euro dollar, in that case based on daily data. Okay, so each box that you see here is 20 pips, and marked with this dashed blue and red lines, you see the double top and double bottom patterns, which can be recognized in this pattern, in this chart. Okay, so you see here during this ascending move here, there are a series of double tops, of continuation double tops being drawn. There is within the trend there is a correction which printed in that case a double bottom, and subsequent you see another two double tops being printed. And once there is a reversal issued here on the 148 area, for instance, 148 more or less, there is a sell signal from this double bottom right here, with a strong move downwards, another double bottom with a subsequent move. So already you can see these basic signals in this chart. When we have a more sideways price action, you see there are some conflicting signals, where we see double tops and double bottoms changing the signal direction from the chart, and we are still now under the influence of this the last double top buy here on more or less here on the 43.20 or so on this green ascending column. Okay. If there are any questions as for the construction or the specifics of the pattern, you are welcome to ask. We are good in time. Okay, so let's move on with the same chart. Now recognizing also the reversal double tops and double bottoms. Okay, you see the dashed lines remain the continuation variance, and the straight line you see the reversal variance. Okay, are not so many in that case. We have here a trending chart, so that the reversal patterns are a minority, but here to the right side we can see quite many of them changing here the direction of the chart. Okay, the reversal double tops and double bottoms. So the last signal printed on this chart is a reversal type, a reversal double top in that case. I'm asked by how to draw pointing figure on MT4. Well, so far as I know, you need a plugin in order to make it work on MetaTrader. It's not a chart construction that comes with a platform. Point and figure charting is usually, since it is a professional or more used by professionals, only semi-professional and professional platforms have this charting method. But I know that there are some plugins out there for MT4. You may check under the platform section on our website if you can find that indicator. If not, just I will print my email here at the end, and if there is no such a indicator or plugin for the MetaTrader, we'll try to search one. Otherwise, there are several platforms which display price in this manner. I'm using in this case teletrader software, which is able to display the point and figure charts. Okay. Fine. So here we saw the continuation and the reversal type of double bottoms. We see that a reversal pattern or a continuation pattern, it does not depend on the position towards the price chart, but rather on the configuration of the pattern itself. So you can have a reversal on the very top, on the very bottom, and you can have for instance, a double top being printed on the low side of the chart, like that one here on the right side where my cursor is. We have here a reversal double top at the very bottom of the price action, as seen under this chart configuration here. So don't let the words confuse you. Double top doesn't mean that we have to be on the top of the chart, but rather the configuration of a resistance. Okay, it's the price action that is being trying to compress here into a pattern, that price behavior that we are trying to recognize by means of this pattern. Okay, point and figure, as we saw in previous webinars, it's all about price action. It's pure price action. As you can see here on the bottom of the chart, on the time axis, you see that time intervals are not regular. They are not regular as they would be in a candlestick chart or in a bar chart or any other type of chart. In this case, the time parcels or segments are not regular. That means if the price doesn't move significantly, we wouldn't have anything new printed on that chart. Okay, so there is only those movements are printed on the chart that are really significant. And by significant, we have seen also that what this means that in this case here specifically, there is only a new box being drawn in the direction of the trend if the price advances by 20 pips, because it's a 20 pip box. So every X and every O, in that case the O's are transformed into red squares, but it represents the classical O in the point and figure. So every time we see an X or an O, means the price has advanced 20 pips in the direction of that trend, be it up or down trend. And anytime there is a reversal or a change in column, it must be at least by an amount of 3 boxes. In that case, means 60 pips. Okay, 60. Okay, so there is an asymmetric filter built into the construction of the chart. And that asymmetric filter is something that no other chart type has. Okay, so the preference is always given to the direction of the prevailing trend, which is the reason why point and figure charts represent trends better than any other chart type, and with the advantage, like we said, that if there is no significant move, that means if there is no reversal that reaches the amount of the filter, in that case 3 boxes, it's not displayed on the chart. Okay, so the way you calibrate the box size and the reversal amount speaks a lot about your time horizon or the type of patterns that you want to see. Ideally, in order to calibrate a chart, you would calibrate it in such a way that you can recognize those basic signals like double tops and double bottoms. Okay, if you are not able to recognize these signals, means you need another chart in order to assess the price action and to use it in order to trade, to capitalize on it. Okay, obviously you can use a less sensitive chart. We could use here, for instance, a 20 pip, but a 5-box reversal, for instance. So only those reversals by 100 pips would be recognized and printed on the chart. Means that you would really resume all that price action probably to 1 or 3 columns only, but at least you would have a larger view of what the main direction is of that set of price data that you have. Okay, and so you have to play a bit with different box sizes and reversal amounts in order to give you enough sensitivity and at the same time a good idea of the direction of the prevailing direction of the trend. Okay, and in point and figure charts, it's usual that analysts or traders use different combinations of box sizes and reversal amounts in order to adjust for short-term movements and a more larger or long-term view of price action. Joker is asking when to enter, what is your stop loss, any results? Well, this is something that point and figure charts are very well geared to give entry signals and also to calculate the risk, the amount of risk, and therefore the reward to risk ratios, because there are also very strict rules in order to advise the possible extension of movement. Okay, there are certain counts that we can apply to the patterns, horizontal and vertical counts, and these counts will display the minimum possible objectives or targets for those patterns. Okay, these are very strict rules that point and figure charts have, and this makes it very interesting because you have always a very strict control about the stop loss, about entry levels, and so on. But this is something that we will not enter into today, because in order to get into the ratios and the counts, we have to see first what type of patterns there are in order to measure them. We have to first recognize the patterns in order for us to measure. There are other tools that we will see also, like trend lines and so on. And on all this together is what makes a chart tradable. Okay, and this would allow us to do a backtesting and to get results. Okay. Jack 1 asks 3 boxes, box color change after 60 pips. Is it too slow to detect trend change? Well, this is It depends on, like I said, on your time horizon. The three box reversal is a very standard box reversal size that is used. Specifically, the continuation and reversal double tops and double bottoms are only seen or detected in this reversal amount. So you have somehow to use them. You cannot, but also combine a 3 reversal with a 5 reversal and a 2 or 1 box reversal. Okay, and that combination is what usually is done when you trade with a pointing figure chart. Okay, so you may use, like we will see in further charts, you may use the 3 box reversal in order to assess the direction of the trend, and the direction of the trend is recognized, for instance, by the last printed signal that you get. So we would now be still under the influence of this reversal double top here. So from that moment on, you would search in inferior or more sensible chart configurations for buy signals, okay, and for patterns and buy signals derived from these patterns. There are several strategies that can be built, but it's always a combination of different types of sensitivities, of box sizes and reversal amounts, which will allow you to establish a strategy. I hope to have answered these both questions. Now we'll see. I think this will also answer to both of Joker and Jack's questions, because we will see this specific double top and double bottom patterns in a much more sensible chart construction, which is the 1 box. This is the first one. The original pointing figure charts were configured this way, and this is also it was our first topic in the first webinar. We started by constructing 1 box reversal charts, because of being perhaps the ones that transmit price action with more accuracy, because if they show literally every change that the tick data is printing on the tape. So in 1 box charts, these patterns, continuation and reversal patterns, have different names, specifically or semi-catapults and fulcrums. We'll see a lot of examples and why they are called so. Continuation patterns, we'll start with continuation patterns, are called semi-catapults, and these are the equivalent to double bottom and tops, and also to triple bottoms and tops that we haven't seen, but we'll see later on in 3 box reversal charts. Okay, it's basically it's a breakout of a sideways congestion, like we see here on the right side on that little chart here, and where we see the same price action that gave way to this double top here on the right. The same price action printed on 1 box reversal, okay, is translated into that price action here. We see that there are more unfilled boxes in between, okay, and the more unfilled boxes a 1 box pattern has, or a 1 box congestion shows, then the stronger the breakout signal will be. Okay, this represents this ascending move here, and a correction in that case of 2 boxes. Remember, when we are talking about 1 box reversal, any reversal which is in the amount of 1 box is printed on the chart, so that you see a lot more movement than in the 3 box reversal, which is less sensitive, and therefore you will have more directional changes and more columns. Okay, that is what is happening here on this right side. You have here the first reaction with a drop in 2 boxes and a subsequent rise of 1 box only, and again a drop of 2 boxes. Okay, and this action here, comprising these 2 columns, okay, makes the action that we see here in the middle column in the 3 reversal. Okay, so that slightly upward move here is not recognized in the 3 box reversal. Okay, thereafter we have again a drop in price and a subsequent rally up to that resistance, and that rally is comprised of 3x, and those 3x are plotted on the 3 box reversal, because the 3 boxes is the minimum that is plotted on a 3 box reversal. But this subsequent drop or reaction to the resistance and rise, this action is not recognizable here, but the breakout is, because it's already in the direction. It's in the direction of the trend. So we need only 1 box in order to advance. It's always this asymmetrical filter, which I mentioned to you. This asymmetrical filter means that I need 1 box to go in the direction of the trend, but I need 3 boxes to go against. In case of the 1 box reversal, I need 1 box to advance, but if I have 1 box against, if the price has retraced by the value of 1 box, be it the box 10 pip, 20, 30 pip, whatever, then a new column is and a new box is printed. Okay, so that would be the equivalent of the standard double top. The 3 box would look like this, and this is called, here on the right side, this is called the semi-catapult. Okay, this is called the semi-catapult. So when we talk about semi-catapults, we are talking about 1 box reversal charts, and we'll talk about double tops. We are talking about 3 box reversal. Boyke asks, in your summary of this session, what do you mean by uncontaminated supply and demand? Well, uncontaminated supply and demand means that the charts, in order to advance, the point in figure chart, in order to advance, in order to print something new on the chart, you need price to advance. You need to have negotiation in the market by a significant amount. Okay, if there is negotiation, but the price stays the same, if it doesn't advance or retraces, then we have nothing new appearing on the chart. So it's uncontaminated for the fact that the time which is implied in any other chart type contaminates charts in a way that if nothing is happening, or all the negotiation, the trading that is being done is not significant enough, you will see the chart nevertheless being printed. Okay, you will see new candles or new bars being printed, and that is something that if we use, as most of us, and me included, if we use candlestick charts or bar charts, we have to be aware of that our perception of time is not always the same. It's not always the same, and this is not something that is specific to trading. That is also happening in any other spheres of our life. If there is a lot of things happening, we have the perception that time expands because a lot of things are happening. If you have a day where you can do a lot of things, or you are on holiday and there are a lot of inputs of new things that you see, that you experiment, so at the end of the day you have this time perception that the day was large, was huge. You could do a lot of things, but the time was the same as the day spent in the office doing some routinary work. Okay, the time lapses is the same. It's the perception. So when you are in front of a chart which is displaying regular time intervals, but there is nothing happening. The problem with most charting applications is that the chart will fit into your window. They will adapt into your window, be it a volatile or with a high volatility or low volatility market. The chart will adapt to the window, and you may tend to think that there is something happening, and act upon something that is not significant. On the other hand, if you are seeing a market with a lot of things happening, the time perception expands, and you think that more time is available, and you may not take the action accordingly. You may not react in time. Okay, and this is something that is also called by the name of intrinsic time, and point and figure charts deal very well with this, because you only see a new X or a new O or a new column being printed if it meets a certain criteria that you previously have chosen for the chart to show. Okay, that is for that reason. It's we resumed the last session saying that point and figure charts show uncontaminated supply and demand. Okay, the semi-catapults that we have just seen have a lot of variants. Okay, as we can see here in the one box reversal chart, we see here that there is always an ascending move towards to a resistance, and a reaction to that resistance and a final breakout. But those reactions can have different shapes, since we are dealing here with a very sensitive chart construction, which is the one box reversal. So many variations can exist. Okay, like that one where my cursor is right now. You see a lot of empty space. So a breakout of such a semi-catapult would be obviously stronger than this buy signal, which would be called a weak buy, and this would be called a strong buy, because there is a relatively strong reversal from that initial top here, establishing resistance, and the next time price rises up to that resistance, if there is no more supply being located on that level, then the subsequent rise or breakout is more significant than from a level where the supply at that resistance level wasn't at all significant. Okay, like here we had just a drop of one box. Okay, and below here we see more variations of the same pattern. Not all of these semi-catapults can be translated into a perfect double top in the three box. Okay, nevertheless, there are many variations of semi-catapults, and that is the difference between three box reversal and one box reversal. One of the reasons when we talk about patterns is that in three box reversal, the patterns are very easy to recognize and to label, whereas in one box reversal chart, there are a lot of variants, and it's more difficult to recognize. But what is important is just to recognize the price action and to understand what happened to price at that level. Okay, and supply and demand analysis in this instance is not different from any other chart type. When we talk about resistance or support, the dynamic of the price reactions to these levels, to supply and demand, are the same. What changes here is the way to display that information. But the action, which is basically buying and selling in the market, this is obviously the same. Okay, in technical analysis, is more about transforming that action, those negotiations, in something recognizable. But the underlying action, which is the buying and selling, is always the same. In case of the continuation, okay, we have seen a continuation double top and a continuation double bottom. Okay, there are also equivalents between the 3-box and the 1-box reversal charts, and these are called also semi-catapults, but in that case a bearish semi-catapult. Whereas to the upper side we have a bullish semi-catapult. If the breakout is, or the breakdown is to the downside, obviously, then we have the bearish, called the bearish semi-catapult. And there are also many variations of the bearish semi-catapults in 1-box charts, also sometimes called inverted semi-catapults. Okay, in the bottom of the chart in the bottom here, we can see some of these variations. Okay, for instance, in the middle here we have a drop, rise and drop to the resistance, subsequent rise in three boxes, a drop, rise and drop, and the fact that we have an X and an O sometimes plotted in the same column, this is a characteristic of 1-box reversal chart. You will not see something like this in the 3-box or any multiple box reversal chart. It's something unique to 1-box reversal chart, and it's called a 1-step back. We have covered this phenomena in our previous webinars. If you haven't checked it, or if you want to learn more about the 1-step backs, please review those webinars where it is explained why it happens and what it means. And here we see another chart. Again, this is it's a euro dollar, okay? And if we remember the previous chart, which was a daily chart, okay, a daily chart and a 20 pips per box and a 3-box reversal, we have here on the right side of the chart the segment printed with an arrow here pointing to one of the double tops of the continuation double tops, okay, here on the right side. And here we have the same price data, but in this case we took the 4-hour high and low instead of the daily. Okay, we took the 4-hour day high and low, and we remained with the same box size of 20 pips, but in this case it's a much more sensible reversal amount because it's only 1 box reversal. So if we recall the previous chart, this has a lot more columns printed. There is a lot more price action recorded here because it's more sensible to the reactions, and we can recognize that double top here as how it looks like here, a bit zoomed in this semi-catapult. Okay, this is the pattern that we see here on the left side with the illustration of a catapult here, in order to understand the meaning of the name of the pattern, which is the catapulting price in one direction. Boyke asks, what is that with wheels on the top left? Yeah, that is the catapult. This is a primitive catapult, which is a mechanism that it has a hinge here in the middle, a hinge, and this arm is laid back and something is this was I think a military tool or mechanism in order to throw stones or bullets in a long distance. And you have a mechanism here with a hinge, an arm, and there is a force movement which is throwing that ball or that stone in one direction, and that is what is happening with price. That is the reason why it is called the catapult, because it is catapulting price beyond a certain level, and that arm here that moves around that hinge would be the support or resistance level. Okay, that imagine that we have this resistance here, and that resistance would be fixed on the right side with a hinge, and it would catapult the price to a next level. Okay, this is the figure. I wanted to print here an illustration so that we have an idea why it's called the semi-catapult. Okay, and it's called semi. We'll understand why it is called semi and not catapult, because there is another pattern which is called catapult in the 3-box reversal. So for the moment, this illustration at least serves us to understand that it's why it is called like this. Okay. Now, in case of the reversal patterns, okay, we started to see the continuation, double top and continuation, double bottom, and now we come to the reversal, double top and double bottom. Okay, the reversal of this basic 3-box pattern, and there are also equivalences in the 1-box version. Okay, in the 1-box charting analysis. And in this case, in case of a reversal, instead of being called semi-catapults as the continuation, they are called fulcrum. Okay, they are called fulcrum. So in 3-box, the names are the same for continuation, for reversal. We have the double top, double bottom. We have to say if it is continuation or reversal. But in case of 1-box, we have to label that as a continuation or reversal, because continuation is semi-catapult. If you have a catapult, imagine you want to throw something in the same direction, and if we have a fulcrum, it's a reversal. Okay. On the bottom here, we have an illustration of what a fulcrum is, and a definition from the freedictionary.com, which says there are 3 different definitions of fulcrum. One is the point or support which a lever pivots, on which a lever pivots. Second, from zoology, an anatomical structure that acts as a hinge or a point of support. And third, an agent through which vital powers are exercised. In that case, a fulcrum is understandable for the price action, since it's a reversal. So it's price that enters into a congestion area and breaks out in the other direction with a midway support or resistance. Okay, so there is a midway action that defines that lever, which would be this. We have here the pattern. We have here the pattern printed here in the bottom, where we see the fulcrum, which is usually the triangle. Okay, you see the lever would be the blue line. Okay, and we have the load and the support. And you have to imagine the load is the price coming into that congestion. Okay, is pressing on the lever from the upper side, and then there is the effort. In that case, the demand. Okay, if the load is the supply, we have the demand here on the right side, making an effort to rise, and obviously the lever can go up and down depending if the load or the lever is stronger or greater. Okay, in that case is in equilibrium, but it is supposed that the effort is bigger and the price retraces or reverts direction. That is why it is called a fulcrum. Okay, and here above we have the 3-box pattern. It will always look like this, and on the other side we have the variant in the 1-box. They can look differently, and here, if you see on the right side, there are some arrows that show the price action that is shown also in the 3-box reversal. Okay, we see this ascending move. We don't see that small reversal here by 1-box, that one step back. We don't see that one step back, because in this case we need always in order to reverse, we need 3 boxes. So in the middle of this ascending column, there may be several reactions, several corrections in price, but they are less than 3 boxes long, so we don't see them. Okay, in the case of the 1 box reversal, they are recorded. That's why we see it appearing here. And the subsequent drop in price, we see it's not steady in the 1 box reversal. We see a 1 box drop, and then a subsequent rise, and then a 2 box drop, and another rise of rally of 1 box, and a drop finally of 2 boxes. And this is all this action here in the second arrow is shown here in the column of O's, in the second column of O's. Okay, the next ascending column is the same in the 1 box and the 3rd box, because there is a strong ascending move, and the subsequent drop is as well equal in both charts. Okay, this is the equivalence. Fine. So we have the 3 box and 1 box reversal patterns once again lined up here. We see the continuation double top is equivalent of the bullish semi-catapult. The continuation double bottom is the bearish semi-catapult, and the reversal double top being called the fulcrum, and the reversal, the bullish fulcrum, and the reversal double top being called the bearish fulcrum. Okay, so this table should help in order to recognize them once again. And another variation or another pattern of in the 3 box reversal would be the triple top and the triple bottom, which is simply the same pattern as the double top and double bottom, but with a subsequent drop or rise in price before the reversal and breakout and final breakout. Okay, these are also easy to recognize, and they will lead usually to a stronger move. Okay, this is understandable because there is more friction. The battle in the support or resistance level takes longer in order to get the supply and demand out of balance and to have the final breakout. It takes a larger negotiation. There has to be more action and reaction before the final breakout is ensured. Okay, therefore it's considered to be a stronger signal, but is also more rare to find. Also, it can be continuation as well as a reversal. And in a triple top, price, as I said, must break above 2 columns of X and above a row of 3X. Okay, there are 2 columns of X, but there are a row of 3X here. You see my cursor. And in the triple bottom, the same, price must break below below 2 columns, 2 previous columns of O's, and below a row of 3 O's. Okay, the rows are the horizontal. Okay. In 1 box chart equivalence, there is no difference between double and triple pattern. There is no way to distinguish them. The only difference is that the semi-catapults and the fulcrums that we have just seen are wider. Okay, are just wider. Okay. Here we see another chart from today morning. In that case, the Australian dollar, and in this case, in order to find triple tops and triple bottoms, I had to have more sensitive data. I have to display the data in a more sensitive way. Okay, because the way I displayed the euro-dollar chart before, which was based on daily data, was enough to find double bottoms and double tops, but not enough to find the triple variant. Okay, this is because I need more volatility in displaying or being shown in the chart, and therefore I have to reduce somehow my time horizon. And to reduce my time horizon, I mean I have to increase the sensitivity of the chart. And to increase the sensitivity of the chart, I can do three things. I can reduce the data which or the period of data which I'm taking. I can reduce the box size, or I can reduce the reversal amount. Since we cannot reduce the reversal amount here because we are looking for three box reversal charts, I can only reduce the two other ones. And in that case, I'm working with a 1 minute data. Instead of daily data, I'm working with a 1 minute data. And each box, in that case, is only 10 pips instead of 20 pips. And you see that there is a more volatile price action shown, and a more and there is more likelihood to have the variant of the triple bottom, the triple top being shown. Okay, and we have here, we can only detect a reversal triple bottom here on that side and that side, but we cannot recognize any reversal triple top. But we can recognize the continuation triple top here and down here. Okay, so the buy signals in that case would come in the first X after the breakout, in that case here and here, and the sell signals in the first box under the support being broken in case of the reversal triple bottom. And yet another chart, also 1 minute, 10 pip per box. In that case, a 3-box reversal of the Kiwi dollar. Okay, and we see price action here displaying also a reversal triple top, and we see that same pattern. Same pattern here shown on the right side in the 1-box reversal. That kind of fulcrum, or that fulcrum pattern here, with a drop below that resistance line, but at that moment we don't have that resistance yet established. We have here this action in the bottom taking place, and the subsequent rally to establishing that resistance. We see a couple of 3 reactions to that level, and a third testing of that level with a small reaction only, and finally a breakout, pullback to that area, to that null support, and a subsequent rise. Okay, so this is the fulcrum as seen in a 1 box, which is here exactly the same price action that we see here on the left side. And below, I've displayed here for you to see, this is a 1 minute data in the candlestick charts. Well, the candles are not seen because they are so compressed that it's almost a line chart, and you can see how long it took in order to get out of this area if you were looking into a 1 minute chart. So for those of you who trade 1 minute charts, you would spend a lot of days in sideways action, and finally, in order to analyze this price action based on minute to minute data, which by the way shows pretty much how the negotiations went, it's not at all usable. I mean, you have to compress charts so much that it wouldn't fit into your window. And this is one of the advantages of the pointing figure, that you can use minute data or even tick data, and compress it into a very nice size into your window, and understand and interpret and act upon that price action. Okay, which is impossible to see in a compressed minute to minute chart using other chart types. All right, we are coming to an end. Just to recap, we've seen that all price and figure patterns and signals are based on these basic patterns in various combinations, the double and the triple top. And we have seen that those patterns can be continuation as well as reversal. Okay, and we've seen also that the 3-box patterns are unambiguous. They only show up in a specific configuration, and therefore they serve for your analysis as a starting point for your analysis in order to build or to assess the direction of price and to build a more complex patterns. On the other hand, one box patterns are less rigid formations, as we just seen with this previous fulcrum example and all the variations of fulcrums and semi-catapults. We have also seen that basic pattern detection helps you to optimize the box size in a way that if you display a price chart using point and figure and you are not able to recognize any double top or double bottom, that means that the optimization of the parameters using the box size and the reversal amount are not significant at all. They are not sensitive enough in order to print those signals, so they help you to start establishing those parameters. Okay, and based on these signals, we can also say that point and figure charts are either bullish or bearish, so there is no intermediate term, whereas in other charting methods you have to think that trends can be sideways, and they are most of the time sideways. And in case of sideways price action, it's not displayed in point and figure chart. At least if you filter, if you use the asymmetric filter to get rid of that information. Okay, thank you very much. I think we have come to an end to this section. I thank you very much for your presence here, for your questions, for your attention. Hope it was interesting for you. You will see, even if you do not use point and figure charts, I think the logic behind those chart constructions is quite interesting. The fact that it uses an asymmetric filter is something that is very widely used in other number-driven indicators, which is the logic that it's worth to know about. And the fact that it shows up with the supply and demand in such a pure way is also very interesting to know about these dynamics. Just as a final word, this webinar was sponsored by the Vantage Point Intermarket Analysis software based on 2 patent-pending technologies: Vantage Point forecasts market trends and trend changes with up to 86% accuracy. If you trade futures, forex, stocks, or ETFs, Vantage Point will help you become a more profitable trader. Thank you very much. See you the next time. Bye-bye.